Another question we got asked from mostly limited partners was, what are some red flags for investments? Some of the red flags for me that come off the top of my mind is, bridge loans. A lot of bridge loans got burned in the last few years, so if you're going in with bridge, be cautious. Another red flag for me is probably the area. We just toured Bachman Lake. It was a little bit of a rougher neighborhood, and with the market being oversupplied a little bit right now, you really want to look out for delinquency, and areas that are more challenging might have some more delinquencies, so that might be a red flag. Another red flag to look out for that most newer investors probably don't see is the underwriting. Check the underwriting and see what kind of projections they're putting out. What's their rent projections? What's their reversion exit cap? The cap rates might not go back down to 4% or even 5%. And then also, on the flip side of that, what is their going in cap rate? Are they buying this deal? Are they buying a 70s deal on a 5 cap? That might be a little overpriced, and you want to see what kind of purchase price and what kind of exit price you see when investing.
So James threw out a lot of good tips there, and if 2 or 3 years ago, if somebody hit you with all that, what would you have said?
I didn't know any of that.
So
probably 3-4 years ago, I was just going to meetups and didn't know. Everyone was like, "Oh yeah, we've just bought this deal," and I was all excited. But yeah, once you start looking under the hood, you start to realize these things, and that's why it's good to get education from us. And we do a lot of events.
Yeah, I mean, one of the LPs that we just had on our sort of speaker series, he was like, "Deal flow rules all or cures all." I can't remember what he said, but you've got to see enough activity, you see enough deal flow and tour enough deals before you see the difference between an A deal, a B deal, a C deal, and in pricing, right? So that's one of the things that I'm going to try to, at our next bus tour, we're going to go look at a C deal and tell you the cap rate that it traded at. Then we're going to look at a B deal, tell you the cap rate and price per unit, and the same with an A deal. And once you have those sort of set points, then when you start looking at deals that you get sent as an LP or even as a GP, then you can say, all right, I'm going to go take a look at a deal and tour it, or this isn't worth my time. So it builds on each other. And the last thing I would say on red flags is, as an LP, I would still have your own sort of simple, basic model to just drop in numbers into, and you can take the GP's numbers and just sort of spread them, but just going through that process will help you get better at underwriting.
Yeah, another thing I like too with those field trips, we do what's called an LOI game, and it kind of shows we team people up into groups of 3 or 4, and then they compete against each other on what they would pay for the property. So it's a really good interactive educational training that we do to really understand how people buy these deals and what price points they get them at. So definitely come out, check out our bus trip next month.